So Mark, we bring it up every time we speak to you because when you came on after the election, you told us you were uncomfortably bullish. So bullish, it makes you feel uncomfortable. Are you more uncomfortable now than you are bullish?
Well, this is the uncomfortable time.
Yeah?
We are long-term bullish, but quite uncomfortable. I think when we think about the administration and kind of where we are in staging things, I saw a point that in the Obama administration, he got his cabinet together by February. We've just gotten Trump's cabinet together, his main cabinet, in May. There's 7,500 people that you form in this whole sort of administration. He's got about 130-something in place right now. So he didn't even have the people in place to get things moving, per se. And so I think the market got ahead of itself a little bit on some of this stuff. But long term, right, I'm still very bullish about deregulation, getting that in place. You know, the thing that we keep talking about is that personnel is policy when it comes to deregulation. You get the right people in place, and they take some of the sound in other gears, you could see a very accretive economy in the U.S. To the extent it takes this long to get it together, though, I start to get uncomfortable.
We talked a lot about pain trades through 2017. About halfway through the year, what is the pain trade of the year so far, given the huge consensus we had around several asset classes at the start of the year, relative to where we are now?
Well, I would say it's really all, you know, different reflections of the same concept, and that's the U.S. reflation trade. In rates, we could see that in the 2-10 yield curve that we just discussed. On the equity side, you could see that in value versus growth, and really what it comes down to, financials would be a key component of value and them underperforming the broader S&P 500 through the year. Again, very tied to the rates trade, given correlations that we've seen. So across asset classes, you could see various different forms of the same concept. And at this point, all of that excitement after the election into December in the first quarter, a good chunk of that's been unraveled at this point. You can see it from the markets themselves coming back to levels and positions as well. 20 seconds on the clock, so it's got to be yes or no. The pain trades of 2017 in May, will they be the same pain trades in December?
It'll be the opposite. No.
The opposite?
Yeah.